Let's talk about taxes. Right now, Congress is debating what they call trickle-down economics. Now, we did this before. The Reagan tax cuts were fantastic. Revenue went up. In 1981, when the Reagan tax cuts were passed, the prior to the tax cuts passing that year, the federal government took in $599 billion. 10 years later, 1991, the federal government took in $1,050,000,000,000. That is an increase of $451 billion in 10 years. Or, put another way, a 57% increase in federal revenue in 10 years because Ronald Reagan cut the top tax rates from 70% down to 28%. That's right. By cutting taxes from 70 down to 28, more people worked, more people invested their money, and overall tax revenue grew from 599 billion to 1,050,000,000,000. Think about that. That's a lot of economic growth. That's a lot of jobs. During that time, Microsoft took off, Apple took off, the computer revolution took off. Why? Because people could invest the profits from their company back into their company. They could do things like buy a computer. Back when the top corporate rate was 70%, the only way to get out of 70%, by the way, that was 70% on everything over $80,000. You or your business made $80,000. Everything over $80,000 went to the federal government. So if you made $1,080,000, $700,000 went to the feds. The only way to get out of that was to buy real estate. Real estate would depreciate, and then you could take that depreciation off your income next year. This led to everybody making good money became a slumlord. So if you were a doctor, a dentist, an engineer, you bought real estate. That real estate offset next year's taxes and your lifetime taxes. So you became a slumlord. You stayed a dentist, but you bought apartment complexes and you didn't take care of them. That led to slumlords all over the country because you weren't a real estate investor. You were somebody who made money, who had to buy real estate to lower their taxes. Ghettos, slumlords, a dentist, doctor, slumlord. Didn't matter. You bought real estate to not pay taxes. You lowered the corporate tax rate. You took the tax incentive out of real estate. Real estate collapsed for a little bit, then it came back. The people, your landlord now is somebody who does it for a living, and we got rid of most of our slumlords because we changed the tax advantage out of real estate, and we just let you keep more of your money so you can invest it and spend it the way you want to, not the way you bribe the government into letting you do it. That's what a tax cut or a tax loophole is. Somebody bribed a politician to let them keep more of their money if they do something that the politician wants. Now, let's get back to the lie of tax cuts for the rich, hurt the poor, and unbalance the budget. 57% increase in federal revenues in 10 years. Went from 599 billion to 1,050,000,000,000. That's a hell of an increase in 10 years. Why did it happen? Because we cut taxes and stimulated the economy. Lower rates equals more revenue. Think about a sale. You have a very expensive case of beer. You have a sale on beer, Budweiser, Miller Lite. People buy more Budweiser. Budweiser makes more money because they're on sale. If lowering taxes didn't create revenue, that would mean also lowering prices on other goods wouldn't create revenue. Every company has a sale. They have a Christmas sale. They're still making money. They make more money at Christmas than they do the rest of the year. Why? Because they have a sale and they sell more. Lower taxes means more economic opportunity, more economic activity, and the government makes more money. So anyone that tells you that lower taxes equals less revenue, ask them how much money the federal government took in 1981 before the Reagan tax cuts and how much they took in 1991, 10 years after. I will tell you, the 1981, the year before the tax cuts were passed and went into effect, it was $590 billion. 10 years later, 1991, it was $1,050,000,000,000. That's $451 billion more money because of the tax cut. Why wasn't balance then? I will tell you, they spent more than $551 billion a year. The budget was that much bigger in 1991. It was more than $451 billion more in 1991 than it was in 1981. That's why there was still a deficit. You can't out earn a high spender. That's why the budget was never balanced. It wasn't lack of revenue. As a matter of fact, revenues were 57% higher 10 years after the first Reagan tax cut. I'm Tim with Tim's TV. That is the truth about taxes. And anybody tells you that tax cuts reduce revenue is a liar. Go look up the numbers yourself. Look at the tax rates versus the revenue. Once again, top tax rate, 70%, 1980, 1981. Reagan tax cuts. The year at 70%, the federal government took in $599 billion. By 1991, tax rate was 28%. Federal government took in $1 trillion and $50 billion. $451 billion increase by lowering the taxes. Lower taxes equal higher revenue. Anybody tells you the difference, go look it up yourself. Look up revenues and you'll know that you're being lied to. The media is lying to you. The Democrats are lying to you. And the Democrats need to talk raw numbers. I'm Tim with Tim's TV, the truth about tax cuts and tax revenue. Thank you. Ask you, please hit the subscribe button. Also, share with all your friends. And please comment. Comment, subscribe, share, tell everybody. Whether you love me, whether you hate me, I am the best thing going on YouTube today. So tell everybody, bring it on. You pro me, you're against me, bring it on. But subscribe, share, and comment. Thank you. I'm Tim with Tim's TV.